connect with the management of Venky's. Stock has been one of the biggest wealth creators so far in 2018. We talked to the management about the contribution from newer retail, their value-added products, as well as the comeback of glut in poultry. Let's connect then with Mr. B. Venkatesh Rao. He's the Managing Director of Uttara Foods and Feeds at Venkys India. Thank you so much for taking time out and joining in on the show. Now, you had spoken previously about the glut situation in the poultry industry, which has eased somewhat. However, you've also acknowledged that you might see the situation reversing and coming back, the glut coming back in the industry. Tell us, has that happened so far?
It's already in the southern and the western regions, it's already happening, ma'am, because there's overproduction, but still the rates are under control. And the northern zone of geographically is okay, but still I think it is a problematic thing that there is going to be next year is going to be somewhat like everybody's placements are very high, and so the production is already looking up, and you can see the rates already coming a little bit down, but still okay, you can say.
So where do you think things would settle for Venky's? You had a huge advantage because the feed prices, they came down, and then there was a huge resurgence in egg demand. Do you think these two big one-time adjustments are behind Venky's?
Partly, of course, feed is the major content, because the raw material, if it is good, then it's win-win situation. But don't forget that there was a huge gap of the market also, production and sale ke beech mein, consumption ke beech mein. So there's a huge gap. There was a huge gap. So it is all win-win situation till now, and hopefully for next 2, 3, 4, 5, 6 months it will be stable.
Okay. Could you give me a broad classification of how much value-added products you've managed to add in your portfolio as percentage of your total sales in FY19? How much will come from value-added products? And the reason I'm asking you this question is because last time when we interacted with you, your whole pitch was that, look, you're moving towards value-added products, and that would differentiate Venky's from just being a boiler stroke, chicken company and an egg company.
No, yeah, actually, see, it's value-added products like also in Venky's, for example, in further processed products like ETC products, easy-to-cook products, also we added few more products, and you can see that the fast food chains, the multinationals, international chains, particularly if you see Domino's, you can say Taco Bell, you can say Pizza Hut, you can say Domino's, you can say KFC's. They're supplying to 2,500 restaurants and across the country, which I think easily are going to go by 10 to 25% more, and automatically the sales will go up. Even the express for we have individually are about 100 outlets in India itself, and I think we will be doubling in next 2 years. So there's a huge amount of consumption in there itself, plus the cat food and the pet food. There's so many new avenues coming up. So by next year, I think even the soybean, the vegetable oil plant in Nagar will be ready, and soybean extraction plant also will be ready. So there are n number of openings coming up still. So this is what I think can answer your question.
Right, you're also increasing your number of consumer-facing products, which will in turn aid your margins. So tell us, what is the percentage contribution from such value-added products currently, and how do you see this increasing?
I think particularly if you see, there is through these multinational chains and all this, we have a contribution of 40 to 43% in Venky's, and as far as the chicken is, Venky's fast food or Venky's further processed chicken is concerned. Otherwise also this you can say this pet products and the various other products which you have, the health products, animal health products, all that are contributing another 50%, you can say. So particularly we are focusing on this pet, we are focusing on this nutrition value products, we are focusing on further processing fast food products. So this all a mix, which in particularly I won't be able to tell you percentage wise, but we are going good.
You have multiple subsidiaries, and are there any plans to merge any of your subsidiaries into the listed entity? And especially, what about Venkateshwara Hatcheries? Are you looking at merging that with your listed entity?
No, I don't think so, sir, because Venkatesh Rao is a flagship company right from my parents' time, and it will stay that still. And Venky's as such has no plans as such. It's going good, that's good, and I think we have no other plans. If at all we add two new products, we might come with some new companies, but not right now. I don't think so. Anything like that, sir.
Can you give me a sense as to how big your non-listed business is? At what rate is that business growing? I'm just trying to understand, can two businesses coexist separately?
If you see, it's not existing separately. Venkateshwara hatcheries, VRB, Venco, the research units, all are interlinked. Some are producing grandparents, some are producing parents, and then of course, Venkys is having its own products, and plus it's further processing chicken. What is looking at Venkys, and the millings and the feed millings and various other activities. There's Uttara Foods also. So I think it's Venky should be somewhere in the third or fourth company as far as the turnover goes. And we are not still exactly gone behind the turnover game, but I think still Venkateshwara Hatchery stands the biggest company now.
What about the debt position? It was at a high level, but you managed to lower your overall debt position quite significantly. So give us a sense as to what the current debt is on your books, and by when do you plan to meet your target to be completely debt-free?
Debt free, again a very difficult question, but next 2 years we are aiming to be a debt free company, but it totally depends on the market, the range, and the overproduction levels. It depends on the market, ma'am, and I think present we're doing okay, and I think whatever we had used, whatever debts we had, I think we have come back very strongly, reducing the number, but it's very difficult to give you exact date and time, or sorry, exact date, whether we can finish it in 2 years, 3 years, 4 years. It totally depends. This industry depends on totally on seasonal and production. It's a very price sensitive market, so you have to be very careful. And if I say something, maybe you'll catch me in next 1 year. Yeah.
Well, you can't blame us, sometimes it is our job to read between the lines, try and garner as much as we can, but I won't pressure you. I understand that you said that it's difficult to give a concrete timeline. I'll move away from that topic to give you a little more comfort, and let's chat exports then. What is the outlook there? You're currently present in the Middle East, but are you looking at expanding your geographical footprint more?
Ma'am, I think what we are looking at exactly as in the Middle East, we are doing not bad. In last 5 years, what we started exporting, we are having about 75% in the Middle East market, and we are in few countries, of course, and we are also expanding to new markets like Iraq, Qatar, and few other Arabian countries, and we are looking at Russian market also as well. Poultry people have gone to survey there. So I think for the hatching eggs and various other aspects of poultry products. So we are looking at internationally also at and percentage wise it will be a little difficult, but somewhere around 15% we are holding on there, and we are doing not bad, you can say, for exports in Middle East, and particularly in Eastern European countries we are trying very hard now. So and even Morocco we are looking at opening up.
If I look at your last 2 or 3 quarters, there has been a massive uptick in your profitability, and that could be attributed to both demand and savings because of low feedstock prices. Now things are normalizing, and you expect that there could be a slowdown in demand as well because of additional capacity. So can I safely assume that the one-time re-rating, what we've seen at your at your PAT level, at bottom line level, that is behind Venkys?
Not exactly, because every company has got different products, and I think it depends totally again on the market, because it's interlinked with the poultry industry, and this is going to happen time and again, because when there's huge glut, there's going to be drop, and when there is huge scope, there is going to be good margins. So particularly Venkateshwara is looking in, you can say, it sells parents, and Venkys is doing other products. So it totally, in Uttara does feed milling. So it's all interlinked, but all in different pockets. You can't mix. feed profitability with parents, or parents with hatching eggs, or hatching eggs with for the processing products.
So the kind of quarterly run rate which you maintain at PAT level or profit after tax level, do you think that kind of a run rate you would maintain for next 2 or 3 quarters?
It's very ticklish and difficult question, sir, you're asking me, but I think we should be able to maintain, but it totally depends on the rates, what you're getting in the market. So we will try to keep our best services, quality, and trying to update nice people like you.
So what were the what were the average rates for last year, and what are the average rates this year so far?
Actually, sir, the rates have already started falling, and the average should be about 62, 63, and between 65 and 60. I'm talking about broilers. And this is the first time we saw some good profits for last couple of months in the egg laying industry, layer industry. So after many years, actually 2 years after the glut, and so I think this will remain till the gap closes down, and I hope 10 to 12%, 10% grows in layers and 12% goes in broilers per annum, so we can maintain the give and take of the market.
Mr. Rao, I want to ask you a question that I'm sure a lot of investors would like to know the answer to. What's the secret sauce or your ingredient to success? Because at a time when the markets have been declining, Venkys has yet again been one of the biggest wealth creators so far in 2018. So tell us, what is the strategy? What makes investors trust you?
Very simple, man. We've got a range of products, technology, and geographically we are based all over India. So if somewhere, this is not a proper answer, but still, if for example the rates are very down in south and west, but the north, where Venky's presence is more in north, is doing good. So I think infrastructure, the products, the quality, the service, I think keeps it up, and I think still this is what in short I can see at right now. Particularly the technology we are putting in the products, everybody is doing good. I'm sure we are not the only one, but we are trying to become one of the best or whatever we can give to the customers, respected shareholders, or even the customers or local heads.
Make it sound all too easy, so no secret sauce clearly. Thank you so much then, Mr. Rao, for taking time out and being with us on ET Now, giving us a sense of how things are shaping up for the company, what the outlook is as well going forward. So clearly no plans to merge any of their unlisted groups. They're talking about stability in prices and how they are going to continue to see a poultry glut in the southern and the western region. That's the stock for you. 4,198 on last count, up by a good 68 rupees in trade right now, and one of the smartest movers that we've seen in 2018 so far, despite the choppiness and volatility in the markets.